Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. On today's show, we have a bunch of things to discuss. Number one, Palantir has made an investment / gotten equity grants in a company. We're going to talk about the company, why they got equity in that company, and why I think they're actually willing to take equity versus money from that company for some of the work that they've done. So we're going to talk about that. Number two, biggest thing of the day, S&P 500. We've all been waiting and wondering, when is it going to happen? Maybe it happens this Friday. We're going to talk about the implications of what that would be like, why it would happen this Friday, and what are the possibilities of it actually happening this Friday. And then finally, we're going to look at a clip from Alex Karp at his recent interview appearance he did at a conference. He said something really unique about AI, and I want to juxtapose what he said about AI in the context of what's going on with NVIDIA, and ultimately my thoughts on how NVIDIA is implicating not only the broader market, but also Palantir, and what this means for the long term in terms of Palantir being able to capitalize on the AI market opportunity given what NVIDIA showed on their earnings. Don't go anywhere. Let's get into it. Okay, so first thing let's do is discuss this equity grant thing that Palantir got. Real quick before we get into that, price action, 24.39, Palantir's up 3.54% of the day. The entire market is up today. And really, there's nothing that much macro going on. I think NVIDIA earnings were really well last week, and that's what got the market very excited. And you've got Bitcoin at 57,000 right now, and that's also pushing the markets a bit higher. So Palantir right here at 24.41 on the day. Now, the equity grant that Palantir got. So this happened last night. The SEC filing came out. This was the company, ticker symbol SRFM. This is actually up, I think, close to 10% today. SRFM. This is up 10%. Yeah, 10.38%. Surf Air Mobility. And now this company is really interesting. We'll talk about what the company is in a second, but Palantir got 1.8 million shares. As you can see right here, the reporting person held 5.2 million shares. So they, I believe, invested to buy the other 3 million shares. I could be wrong about that, but that's what it seems like. And they definitely got 1.8 million shares on February 15th as payment for certain outstanding receivables. What that means to me, and this was filed last night on Palantir's website, is that Surf Air Mobility couldn't pay for the services. And so if they couldn't pay for the services, they gave up some equity, which has happened a lot in the past, right? Palantir has worked with many SPACs, and they kind of bartered AIP or Foundry to be able to get some of their equity instead of getting paid. So to me, if a company is willing to give up their equity to continue using a software, that software might really be important to them, because if they need the software to keep doing business, but they can't pay for it, they'd rather give up equity in their company, right? They'd rather own less of the company just to be able to have access to the software, because the software is that transformational for their business, just further proving the point that AIP and Foundry is the real deal. Now, a lot of people are saying, oh, is this like another whole SPAC situation? Because Palantir had a lot of equities in a lot of companies. We ended up turning positive on the SPACs. I think we own a little bit of equity in some of them. We pretty much sold out of most of them. This isn't a SPAC situation to me. This isn't something that's been on the balance sheet since 2020. Reason being, Surf Air Mobility went public July 2023. So this is a relatively new company that went public, and I would imagine Palantir either approached them or they approached Palantir to be able to use their software. And Palantir, we know what they do. We know they give pilots. We know that they let people use it for months before they even think about monetization, because if you're on the cutting edge of an industry, if you're doing something innovative and you can use Palantir's AIP, Foundry, Apollo, anything to actually streamline your processes, Palantir wants to be part of that industry, and they want their software to be on the cutting edge front lines. That was the entire thesis behind investing in the SPACs. If we look at Surf Air Mobility, well, it's electric jets, eVTOL jets, and the thing that's very familiar to me when I look at Surf Air Mobility is Lilium. I think a lot of people forgot Palantir invested in Lilium a long time ago. Now, they don't own any more shares, to the best of my knowledge, anymore in Lilium, but they were big proponents of Lilium. They've done videos with Lilium. Lilium has actively talked about how amazing Foundry has been to ontologize their data in terms of what they're building. Surf Air Mobility, to me, is similar to Lilium. The design is very different. I think they have a different architecture in terms of how they actually get the airplanes to get in the sky, or the charter flights to get in the sky, even though they're electric, but it is the same concept. And so in my opinion, I think Palantir had an opportunity to invest in these guys at a very cheap price, or to get equity from them for procuring services and software. And they were like, well, we already work with Lilium. We've done a ton of R&D to know what Lilium wants and how Lilium reacts. And so if we already worked with Lilium, we don't own their stock anymore, maybe because we got out. We didn't want to be part of them anymore. There's another company that's doing something that's similar maybe we can get into these guys at a better valuation. We can get some of their equity for giving some of the software. We already know how to help them use the software. Remember, Palantir is very customized in terms of the way they work with their clients. And so if they work with Lilium, they got a ton of R&D for how they work with Lilium. Then they go to Surf Air. Surf Air says, hey, take a bunch of our equity, just give us AIP. Maybe Palantir was like, that's a deal that we want to do. So this is real speculation from my part, but that's the way I'm putting the pieces to this together. I think the reason they got this from Surf Air is because it was similar to Lilium. We know that Palantir does R&D in a certain industry and then, finds other players in that industry. And if they think there's something special with Surf Air, then maybe that's why they said, all right, give us some of your equity and we'll let you use our software. But right now they own 5.2 million shares. Surf Air is up 11% as the market's open today, February 27th. It's an $86 million company, very small company, up 11% today, and Palantir 24.41. $53 billion company, probably gave some exposure to Surf Air, which is why investors got excited about this company. In terms of, look, if anyone's thinking, oh, maybe I should invest in Surf Air, I have no idea what this company does. I mean, like, I can see it's electric, flights, but I have no understanding of the tech, the moat, the financials of this company. So I wouldn't be that keen to jump into it just because Palantir is investing in them. Palantir just might see a nice opportunity here, and they're, getting paid equity for the long-term future to just give their software. Maybe it's a reasonable thing that they're planning to do here with Surf Air. But Palantir, now an owner of about 5 million shares of Surf Air Mobility. All right, let's get to the big news of the day. The big news is, of course, S&P 500 inclusion. So our good friend Arnie tweeted this out today. S&P 500 inclusion could be announced on Friday. What's happening on Friday, March 1st? S&P 500, 400, 600 quarterly review. So what does this mean? This is when the index rebalances. I believe, if I'm not wrong, they rebalance about 4 times a year. And when they do the rebalance, some companies have to leave the index. Some companies have to enter the index. So, for example, last time they did the rebalance was in December. And a company that left the index, for example, was SolarEdge. SolarEdge is a company that makes microinverters for solar panels. Obviously, their demand has been hit dramatically as interest rates have stayed high. It's hard to finance solar when interest rates are high, right? So they've had a pretty tough year, and they didn't have the requirements anymore to be in the index. So they got taken out, and companies that got added in December were Uber. Uber is up pretty nicely since December, and Lululemon. Now, I did not know Uber and Lululemon were on the list to get included into the S&P 500. I definitely didn't know about Lululemon. So a lot of people are saying, well, if Palantir was actually getting into the S&P 500, wouldn't there be a leak? Wouldn't there be like a bunch of people talking about it? Wouldn't be all these news articles coming out talking about Palantir and like Tesla before it got into the S&P 500? It was this big event, and then it finally happened, right? And then there was a bit of a sell-off. So why isn't that happening right now? I mean, I think 2 things. Number 1, Palantir still is not as popular as Tesla, right, back in 2020, so that there's a little bit of a difference there. But number 2, if you didn't know that Lululemon and Uber were getting added to the S&P 500 back in December, is Palantir that different, right? Like, we care about Palantir, but to the broader markets, Palantir is just Palantir, right? They don't, like, it's not like the Tesla name. There's not Elon Musk attached with it. So if Palantir gets added to the S&P 500 on Friday, all of us are going to be like, holy crap, right? It's going to be a big day. But for everyone else in the markets, it's like they're not going to care that much, right? So if that's the case, then maybe there doesn't need to be this massive hype cycle and all these articles and news. Maybe it's just going to happen and then boom, it's done. Now, one thing about this that's also really important, this was a good post by Palantir Source here on Twitter, another really good Palantir account. Here's the S&P 500 portfolio companies' percentage of institutional holdings. So on average, institutions own 82% of a company on the S&P 500. The median is 85%, the index high is 111%, and the index low is 33%. Palantir has about 38.38% of institutional ownership. So if included, Palantir would have the second lowest institutional holding out of all 500 companies. Only 7 companies in the index have institutional holdings below 50%. And I know some people have been saying this institutional ownership is about 42%. Okay, let's say it's 42% instead of 38%. It varies every day, but that's still below 50%. Only 7 companies in the S&P have an institutional ownership lower than 50%. Palantir would have the second lowest institutional holding. What does this mean? I think 2 things. Number 1, this means that the bear cases, the committee might say, hey, you guys don't have enough institutional holders. I do not think that is a requirement. The last time I read the S&P inclusion requirements to get in. So I don't think institutional holding is like the big thing that they look at, but it might be. And so as a result of that, they might say, hey, we don't think you're ready for the S&P 500 yet. We think you're a little bit too volatile. And so we're not going to include you. I think that's something that definitely could happen, right? things could happen, and then March we don't get rebalanced, we would have to wait for another 3-4 months. The bull case is that because Palantir meets all the other requirements, they get in, and then institutions have to own it because now it's part of the S&P 500. Now it's part of that, one of the biggest ETFs in the world. By the way, the S&P 500 just crossed $500 billion of assets this week. It happened on Monday. So as a result of all of this, the bear case is Palantir doesn't get included because the committee, which I don't even know who's on this committee, but these people have to ultimately decide what happens and what doesn't happen. And they may say, hey, not yet. We'll try again in another couple months. Or they're like, all right, you guys can get in. And then there's a surge of buying that happens because institutional investors need to have exposure to Palantir. Now, one other thing that's really important to understand here is that we are up almost 50% year to date. There could be an argument that the S&P 500 inclusion, an eventuality that investors have been looking at is kind of baked in. Because institutional investors saw the earnings. They're like, all right, the earnings are amazing. They're definitely getting to the S&P in a couple months. Let's buy the stock right now, which is why we've seen not that much volatility in Palantir. I mean, if we look at Palantir right now, 24.41, it's been stuck in this 23 to 25 range. We hit 22.30 very briefly, then 22.80. It's kind of been stuck here from 22 to 25. I think we need another month to be at this range, but this is kind of forming into a new base, which means the institutional investors that did buy, and we knew, after their earnings, that the volume just exploded. There was a lot of buy-side pressure. They're not selling anytime soon, right? They're holding the company. They understand their thesis. They like the earnings. They're holding the stock. Another reason they might have bought and, started holding the stock more, and we saw all that volume a week after earnings, is because they knew eventually Palantir was going to be included in the S&P 500. And so we might as well buy stock right now. So there can be an argument that maybe institutions are underexposed and there's a massive run-up if they get included. Or institutions already knew that they were going to run up, and so they bought the stock before it happens. Regardless of what happens, to me, I think this is going to be positive no matter what. If Palantir gets into the S&P 500, even if it sells off, who cares? They're in the S&P 500. Like, if you get a better chance to buy it at a cheaper price, you're buying a company that is now included in the 500 biggest companies in America that every institutional investor has to have some exposure to, right? The S&P is the market. The S&P goes down, the broader market goes down. The S&P goes up, the broader market goes up. Some elements of the market are detached from it, like crypto doesn't always operate with the S&P, but still, it's a big deal. And if they do get included and institutional investors have to buy more, then maybe that creates more buy-side pressure on the stock. So I think this is very positive for Palantir in this journey of us covering the company over the past couple of years. This is one of the biggest things that is going to happen for the company because, a lot of people are going to be exposed to Palantir. And it's just going to mean more people care about the company, more people know about the company, more people follow the news about the company, and eventually the company can continue to grow because they have the awareness of the masses, and they have the ability to execute, hopefully, against that awareness, which is what Palantir has proven to do so far this year. So super excited for S&P 500. Let me know what you think, if they're getting included or not, and we'll see on Friday what ends up happening. All right, last thing I want to discuss today. Here's a clip of Alex Karp at his recent interview he did at a conference. I want to play this clip, and then I want to talk about my thoughts around Palantir and NVIDIA post-earnings, because I put this in my newsletter on Sunday when I sent it out, dailypalantir.substack.com, and I had a little bit of a realization on the correlation between NVIDIA and Palantir, and so I want to discuss that after we listen to this clip. All right, here is Karp speaking on AI.
A rational environment that every day gets more rational. That playbook is out the door. So your products have to work in an environment where you can understand your supply chain even as it's disrupted, predict potentially disruptions, treat your company and all of its latent assets as a portfolio under the condition that the portfolio will be very different tomorrow than it is today. And the stress that is placed upon it does presuppose robust software in your commercial environment and at war, and that your primary duty as a leader now is to adapt for that environment. And what does that mean? It means going to the front line and seeing do my products work? We do these boot camps where we tell everybody, take everything you've done in AI, prepare, do all the PowerPoints that you have people doing, and then compare it to what we can do live in 10 hours. Now, of course, it's self-serving because it's not 10 hours. It's being right about architectural decisions over 20 years and then being expressed in 10 hours. But the reason it works and the reason it's valuable for people in this room to consider doing that is you must know the state of play. and you have to look at it directly. And it is your responsibility to go look at this, because if you don't look at it, people around you aren't going to look at it. And I'll tell you something else. Half the world is aligned around some idea that this stuff can't work. That's because they don't have any valuable products. You got to go look at it yourself.
So this was, I think that last line was really exciting, where Karp said, half the world thinks this stuff doesn't work, and that's because they don't have any valuable products. And that's true. A lot of the world does not believe that software and AI can change the trajectory in the course of a company, and that's because they haven't seen it happen in real time. So this brings me to some thoughts on NVIDIA and Palantir. And basically what Karp was saying in that clip was that software is going to be the intermediary that creates this type of industrial revolution for companies, for them to be able to expand and grow using what we now call AI. So Palantir got a small bump on NVIDIA earnings by 5%, and NVIDIA continued to maintain their gains, and Palantir kind of lost it the next day. Right now they're back up at that $24 level, but they kind of moved with NVIDIA to an extent. Now, the broader market rallied off of one stock doing well, and why is this? And we're seeing this still today, a week later after NVIDIA earnings. The way I see it, AI increases productivity, operating margins, and revenue for companies that implement it correctly. It also decreases costs. This is important for public companies because if they decrease their costs and increase their revenues, their earnings should do better, and as a result, investors should buy their stocks. If the earnings do better, you get more people excited to buy your company. So seeing the entire market go up last week on NVIDIA earnings and this week was more of a testament to the confidence investors have that if GPU demand, which is AI demand, continues to surge, we will eventually see the increase in productivity at such a scale that every company, whether a healthcare company or logistics company, will get more efficient and produce better results, which is why I think we're seeing random companies up after NVIDIA earnings that have nothing to do with AI, because the entire market believes if AI is going to increase productivity, then that company, even if it's not a software tech company, will be enhanced via some type of software tech product, which is ultimately going to be better for NVIDIA in terms of GPU demand, but better for every single company because they will increase revenue and decrease costs. Now, where does Palantir come in? Palantir sits in the middle of all those companies, actually implementing AI and increasing revenue and decreasing costs. Just because there's more data center demand does not mean there will just be companies increasing productivity. Software will be needed to operationalize that data that those companies have, which is something like AIP, in order for those companies to figure out how to even begin streamlining their business processes and entering into the stage of advanced data-driven decision making. So NVIDIA is showing the market there's massive demand for AI. Palantir, in my opinion, is set to capitalize on that demand because companies, no matter what type of company they are, healthcare, media, supply chain, logistics, they're going to need something like AIP or Foundry in order to implement software that makes the AI demand that we're seeing from NVIDIA actually real, which can increase revenue and decrease costs within their enterprise. It is a massive, massive market. NVIDIA just showed us the market is only growing when we talked about their earnings, and Palantir wants to be a big, big player in this market. I think what Karp was talking about in that clip that we just saw was that people don't understand how to operationalize this software in a way that enhances their business because they don't have access to the right products. And it's our job at Palantir to basically show them that we've built the products. And now it's a question of sales. It's not a question of tech. It's not a question of product. It's a question of, can we show you the product so that you end up buying into, what this product can do for your business, and then you actually have the results, which is the big thing, before you even pay us. The reason I love Palantir. Show me the value, then show me the money. Don't give me the money in order for you to see the value. And I think NVIDIA kind of proved to the broader market that this GPU AI demand thing is real. And then you're going to need third order derivative companies like Palantir that sit in the middle of making sure that demand that is actualized from the GPUs go into all the other businesses across the world that need AI. And you've got Palantir that is the link to be able to make this happen. One quick stat on NVIDIA, their China revenue went from 25% last quarter to 1% this quarter. Why? Because in October, the US banned banned NVIDIA from selling chips to China. Imagine if they had that Chinese revenue. They would have beaten by an extra couple billion on their earnings if they actually were allowed to sell to China. So the reason I'm saying this is because their demand is not only like real and legit, their earnings would have been even more intense if they were actually able to sell to China, just showing that the entire world is dying for these products. And if that's the case, then Palantir is going to be in the middle that can, I think, grab a very hefty chunk of that market if they execute correctly to be able to serve the world and their AI needs with enterprise software platforms like AIP and Foundry. All right, that's it for me. Thank you, everybody, for listening and watching. DailyPalantir.substack.com. Please make sure you subscribe to my email newsletter, and I will see you guys tomorrow on another episode of Daily Palantir. And Friday is the big day. Let's see if this S&P 500 thing gets rebalanced or not. If it doesn't, that's okay. It eventually will happen. If it does happen, that's awesome, and we'll see how the company ultimately reacts to being finally included in the 500 largest companies in America. Thank you, everybody. Have a good day. I'll see you next time.